Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, July 21st, 2025, we're taking a close look at the NZDUSD currency pair, commonly known as the Kiwi. The market for NZDUSD has been quite dynamic, and the recent news provides some interesting, albeit conflicting, signals. As of today, some sources report NZD/USD trading near 0.5955, showing a gain of around 0.4% in the Asian session, with the US dollar generally struggling. TradingView highlights a 0.5% increase in the past 24 hours, placing the current rate at 0.59562, which is quite close to the last reported daily close from yesterday's data. However, an economies.com snippet from a recent Google search presents a contrasting view, suggesting the NZDUSD price declined and is preparing to break critical support at 0.5975. This divergence in sentiment underscores the importance of a thorough chart analysis to cut through the noise. Other news indicates the New Zealand dollar has weakened by 0.46% over the past month, despite a recent rebound, with traders now eyeing CPI risk ahead of the Reserve Bank of New Zealand's August decision. Ducascopy Bank's analysis reminds us that the NZD is heavily influenced by global dairy and agricultural commodity prices, given New Zealand's position as a major dairy exporter. It also highlights increased volatility during Asian trading hours, especially around New Zealand and Chinese economic data releases, given China's role as New Zealand's largest trading partner. The pair is also highly sensitive to global risk sentiment, with the NZD often weakening when economic uncertainty rises, as the USD typically strengthens as a safe haven. Interest rate decisions by both the RBNZ and the Federal Reserve are significant drivers of price movements. Now, let's turn our attention to the charts to see how these fundamental factors might be reflected in the price action. Starting with the one-day chart, we can observe the broader trends and key levels over the past year. Looking back to March and April 2024, the NZDUSD experienced a clear bearish trend, declining from around 0.617 down to approximately 0.585. This period saw consistent lower highs and lower lows, indicating strong selling pressure. However, May 2024 brought a noticeable reversal, with the pair bouncing back and forming higher lows, hinting at a potential shift in momentum. June 2024 showed increased volatility, with price spikes pushing towards the 0.62 level, quickly followed by sharp drops, suggesting a lack of sustained bullish conviction at those higher prices. The 0.62 to 0.635 region has historically acted as a strong resistance zone, as seen by multiple rejections in late August and September 2024. Conversely, the 0.59 level has provided intermittent support, and below that, the 0.58 area has proven to be a robust floor on several occasions. One of the most striking features on the daily chart are the deep, sharp wicks we saw in November 2024 and January 2025. Specifically, on November 8th and 15th, prices briefly plunged to 0.54014 and even 0.52377 respectively, only to be immediately bought up, forming long lower wicks. Similarly, in January 2025, we witnessed wicks extending as low as 0.493 on the 17th and 0.50589 on the 24th, again indicating very strong buying pressure at these extreme lows. These massive rejections suggest a fundamental demand for the Kiwi at these historically low levels, preventing further sustained declines. The fact that these rapid recoveries occurred despite significant downside volatility speaks volumes about market participants stepping in aggressively. Since these dramatic lows, we've seen a more constructive price action, particularly in April 2025, when NZDUSD experienced a strong bullish run from around 0.55 up towards 0.60. This period marked a significant short-term bullish trend, reversing the earlier bearish sentiment and indicating renewed confidence in the pair. More recently, on the daily chart, after a strong bullish run in April, the price consolidated within the 0.59 to 0.60 range throughout May and June 2025. This consolidation typically indicates a period of indecision or accumulation before the next significant move. The last full daily candle for July 20th closed at 0.59514, which aligns closely with the current rate cited in some news reports for July 21st. However, the opening of the July 21st daily candle is much higher at 0.60117, suggesting a strong bullish start to the new trading day. This discrepancy between the live news rate and the opening of the latest daily candle in our historical data highlights the fast-moving nature of forex markets and potential differences in data aggregation. Transitioning to the 1-hour chart, we can gain a more granular perspective on the recent price action. In early July, the NZDUSD was mainly oscillating between 0.605 and 0.610. After July 7th, a slight downtrend began to form, with lower highs and lower lows appearing on this time frame. Zooming in on the 1-hour chart's most recent data from July, we observe that the pair has largely been consolidating around the 0.597 to 0.605 levels. The period between July 1st and July 2nd shows a relatively stable range before the slight downtick. This suggests that traders are closely watching these levels for potential breakouts. The resistance near 0.61 on the 1-hour chart matches some of the broader daily resistance levels we identified. Moving to the 15-minute chart, we can see the very short-term dynamics at play, particularly from July 16th to 18th. Here, the price is fluctuating tightly, appearing to find a strong floor around 0.594. We see repeated bounces from this level, indicating active buying interest preventing further declines. There's a clear short-term resistance emerging around 0.597 to 0.598, which price has struggled to break cleanly. The volatility remains high on this time frame, with quick swings within the established range. Traders should monitor these microtrends for early signals of a directional move, especially around the 0.594 support and 0.598 resistance. For a short-term bullish outlook, a decisive break and hold above the 0.598 resistance on the 15-minute chart, ideally with increasing volume, would be a positive sign. This could then target the 0.60 level, aligning with the bullish sentiment from some news outlets. Conversely, if the 0.594 support level breaks on high volume, it could signal a continuation of the recent bearish pressure, potentially targeting 0.59 or lower. This scenario would align with the economies.com warning about breaking critical support. Long-term, the overall trend appears to be consolidating after the April 2025 rebound, but the extreme low wicks suggest strong underlying demand that could fuel future rallies. Reasons to be bullish include the recent rebound mentioned in the news, the struggle of the US dollar, and the potential for a hawkish RBNZ stance in August. If New Zealand's CPI data comes in strong, reinforcing the RBNZ's hawkish bias, we could see NZDUSD push higher towards 0.61 and potentially retest the 0.62 to 0.635 resistance zone. Bearish sentiment could prevail if global risk aversion increases, given NZD's risk currency status, or if the RBNZ adopts a dovish tone. A strengthening US dollar, perhaps driven by unexpectedly hawkish Fed signals or strong US economic data, would also pressure NZDUSD downwards. If the price breaks below 0.59 on the daily chart, the next key support would be around 0.58, and then the extreme low rejection zones around 0.54 to 0.49. These levels act as crucial indicators of where institutional buyers might step in once more. In recap, the important price levels to watch are the immediate support at 0.594 and resistance at 0.598 on shorter time frames. On the daily chart, 0.59 remains a key support, while 0.60, 0.61, and the formidable 0.62 to 0.635 range are significant resistance levels. Our unbiased prediction is that the NZDUSD is likely to remain volatile in the short term as the market digests conflicting economic signals and anticipates central bank decisions. A move above 0.598 has a moderate likelihood, perhaps 60%, if the upcoming CPI data from New Zealand is robust or if the US dollar continues its weakness. This would be reinforced by sustained buying volume and positive commentary from RBNZ officials. Conversely, a break below 0.594, leading to a test of 0.59, also carries a moderate likelihood of around 50%, especially if global risk sentiment deteriorates or if U.S. economic data surprises to the upside. This bearish scenario would be reinforced by a significant downturn in global commodity prices, particularly dairy, or a more hawkish Fed stance. Looking ahead, traders should pay close attention to the RBNZ's August decision on interest rates, as this will likely be the primary catalyst for the next major move. Additionally, global dairy auction results and overall risk sentiment will continue to play a significant role. Always remember to manage your risk and stay informed about these market-moving events. Thanks for tuning in to Explain the Charts, and we'll see you in the next analysis.